Thank you very much, Mr. Chairman. Bank spending on buybacks is rising again, and their consumer small banking revenue has sharply increased. Interest rates are high, yet the interest being paid to depositors, ordinary working families, working people with bank accounts. Not a lot of money in Wall Street accounts remains low. Chairman Powell, I'm concerned that when banks don't increase the interest rates on bank accounts, families are losing out on dollars that could be in their pockets. Again, they don't have the kinds of portfolios that some of the folks in this room would have. Is that good for the economy? And are you concerned that banks under your supervision are doing this?
Are not paying sufficient.
That's correct.
That's a question I haven't heard. Of course, they have the option of putting their money in money market funds, and banks compete with each other. But I'll be happy to look into that. I hadn't heard that concern.
Yeah, and I think it is worth taking a look at. Many lower income individuals and families, again, they don't have some of the sophisticated products yet. Money markets are available, but we saw high interest rates and that not being reflected in what depositors are able to benefit from. Could those individuals and families benefit from a high interest rate on their deposits?
Sure. And it's for a long time, we had a lot of mail from people at the Fed to the Fed saying, you should raise interest rates because we're not getting anything on our checking accounts. So we solved that problem.
I don't think we're asking for that, but given the reality, the question. Yeah. So let me pivot. The monetary policy report states that while demand for housing has fallen, a strong labor market has kept prices high. That matches what I've been seeing in Georgia. Too many folks can't afford a home. According to the monetary policy report, mortgage rates were averaging around 7% last month. That's tough for lower income home buyers. Increases of just a percentage point or two can be the difference between owning a home or not. Are you concerned about this interplay between lower demand yet stubbornly high prices and what it means for folks trying to buy a home? And what do you think is driving these high prices?
So the housing market is in a very challenging situation right now. You have this longer run housing shortage, but at the same time, you've got a bunch of things that have to do with the pandemic and the inflation and our response with higher rates. So you have a shortage of homes available for sale because many people are living in homes with a very low rate mortgage that they can't afford to refinance, so they're not moving, which means the supply of regular existing homes that are for sale is historically low and very low transaction rate. That actually pushes up prices of other existing homes and also of new homes because there's just not enough supply. The builders are busy, but they're running into all kinds of supply issues still around zoning and workers and things like that. So it's quite challenging. And of course, rates are high. So people who are buying, a lot of the buyers are cash buyers or are able to actually pay without a mortgage because mortgages are expensive. I will say the first problem, the longer run problem of supply, is a longer run problem. The other problems associated with low rate mortgages and high rates and all that, those will abate as the economy normalizes and as rates normalize. But we'll still be left with a housing market nationally where there's a housing shortage.
There's no question we have a supply issue. And this issue of high prices, lack of supply, of course, disproportionately impacts some communities more than others. According to the monetary policy report, the employment rate for the Black prime age labor force, that is persons between 25 and 54 years of age, reached a historical peak in 2023. The gap between Black and white prime age employment dropped to a nearly 50-year low at around 3%. We can appreciate progress, but a 3% gap is still significant. Would you agree that it is important to continue focusing on narrowing this gap? And if so, what tools does the Federal Reserve have to do this work?
It's very important, and the single best thing we can do is get prices under control, get inflation under control, so that we can have a long expansion with the record is clear that a long expansion really gives significant benefits to people at the low end of the income spectrum, because the labor market gets very tight, inflation is low, and they benefit more than anybody. So that's where we were before the pandemic, and we'd like to get back to that place.
Thank you so very much. I think there are some other legislative tools that Congress could use, and I'm happy to continue to work with the chair in the ways that we've already done to improve that rate, that difference. Thank you.
For sure.